Good afternoon, ladies and gentlemen. On behalf of Barclays Private Bank and PCD Club, we welcome you all to the second part of the Global India series, Destination India. We thank you for your time today. My name is Yuvendra Hora, and I'm the head of the Global India business for the Middle East at Barclays Private Bank, and I'm joined by David Bell from PCD Club. Today, we will enlighten you, our international professional audience, who may have interest in commercial investment opportunities in India, and share their views on the Indian economy. Our panel of experts who have rich and diverse experience in various aspects of India today will share their insights. India, the cradle of human race, the birthplace of human speech, the mother of history, the grandmother of legend, the great-grandmother of tradition. Our most valuable and most artistic materials in the history of man are treasured up in India. Mark Twain. Please allow me to briefly introduce our panelists. Adrish Ghosh. He is the head of sales for Barclays Private Bank, and with him, he brings over 25 years of industry experience. He set up the wealth advisory and structuring practice in India for Barclays. Dr. Gayathri Swahar, co-founder and director marketing of YCook. Her company is awarded the President's Award, winning food technology company that has expertise in the art of extending shelf life for fresh produce up to 1 year without preservatives, additives, or need for refrigeration. Listed amongst the top 20 innovative food companies in the world, we're absolutely honored to have her on our panel. Rahul, Bajoria, the regional economist for Barclays India. He's also known for his publication, The Story of Reserve Bank of India, an in-depth history of India's central bank. His insights are extremely valuable to our panel today. Shreya, who's a partner at AZB and Partners in India, and she's the co-head of private client practice and assists ultra-high net worth business families with intra-family wealth transfer, international private client matters, acquisition and preservation of luxury assets, etc. She's notably commended for her ability to make complicated things sound simple. Without further ado, let's hear from the experts. If I may start with Rahul, what is India's economic outlook shaping up with vaccination and cases rising?
Thank you, Yuvendra, for the very kind introduction, and it's a pleasure to be here. Yuvendra, frankly speaking, I think a lot of us 6 months back when we were looking at the the graph of COVID cases rising, pessimism was quite high. Thankfully, the even if the second wave has kind of come about, what is very clear and evident is that the economic recovery in India is very well entrenched, and lockdowns are likely to be a thing of the past. At the same time, what we notice is that the policymakers, both the RBI and the Government of India, are very focused on making sure that we do not have an early exit from the supportive conditions, whether fiscal or monetary. So, that combined with the fact that globally, we have had tremendous amount of, unprecedented levels of fiscal and monetary policy support being provided, India is actually having a very steep recovery in economic activity. In fact, India is likely to be the fastest growing major economy in 2021. Although, there is a very low base effect as well, kind of propelling us forward. But then I think what is exciting is that, the scarring in the system, whether we look at the financial sector or the non-financial sector, both appear to be relatively under control or is better than what was being feared. At the same time, vaccinations, as you rightly said, has been a big propeller of, sentiment, and we see that clearly in asset prices as well. So I think India appears reasonably well poised to benefit from the recovery cycle, which is currently globally quite well synchronized.
Thank you, Rahul. Shreya, if I may ask you an amazing question, which is very relevant to this discussion. What are the available routes and options for Indian residents looking to set up businesses outside of India or make investments outside of India?
Sure. Thanks, Yuvendra, and thanks for having me here. I think just to lay out the context a bit. In a lot of countries, when we talk about cross-border investments, tax ends up being the driving factor in terms of how the investments are structured. But in India, it's actually the exchange control regime which is the most critical. We have a strong system of capital controls that is fairly tightly regulated by the Reserve Bank of India. And banks in India, who are known as authorized dealers, act as the agents of the RBI in enforcing these rules. So before we figure out what are the available options, we need to keep in mind that before making any remittance or setting up any business outside India, we need to first think about the capital controls regime and how that could impact the commercial choices that we're making. Now, broadly speaking, for Indian residents who are looking to make investments outside India, there would be two potential routes to evaluate. One would be a remittance under the liberalized remittance scheme, which allows every individual the ability to remit up to $250,000 in a year. Currently, it's 250,000, but this limit does change, and so it's relevant to look at what it is at a given point in time. And this remittance may be made for specified purposes. So, for example, it is allowed to make the remittance today for acquisition and holding of shares of both listed and unlisted overseas entities. It is allowed for professional services rendered or in lieu of directors' remuneration, investment in units of mutual funds, venture capital funds, and so on. And from 2013 onwards, there's a specific reference also to this remittance being allowed to set up wholly owned subsidiaries and joint ventures outside India. Now, the other route is known as the overseas direct investment route. And that typically applies when you have an Indian entity which is making the remittance. So this would typically be a partnership or a company, for example. Trusts are not currently allowed to make these remittances. And if you go under the overseas and direct investments route, then you can remit up to 4 times of the net worth of the entity based on the last audited financials. Now, obviously, in terms of numbers, the overseas direct investments route is much more flexible because $250,000 may, in a lot of situations, not be sufficient for the purpose that the client is looking at. But what is important to be kept in mind is that the list of activities for which an ODI investment may be made is much more restricted, and there are more conditions that are applicable. So, for example, it has to be made into a bona fide business activity, and there are reporting requirements on an annual basis. There are repatriation requirements if you end up selling that offshore interest. So the regime applies very differently from the liberalized remittance scheme, but it does allow for a higher sum of money to be sent out if you satisfy those conditions. So those are the two broad options available for Indian residents.
That's very interesting. Thank you very much, Shreya. Adrish, can you tell us a little bit about Barclays in India and who are your ideal clients, if you will?
Thank you, Yuvendra, and it's a pleasure to be on this panel. So Barclays in India has been present for over 3 decades, since 1990, offering a range of banking and financial services, including investment services through the private client business. The private client business in India is one of the leading global players, providing a range of services to ultra high net worth families, many of them also having global linkages with our offices in Dubai, London, and Europe. In India, within the private client business, we have a full suite booking platform which helps clients with their banking and investment needs for largely rupee denominated assets. We operate through multiple legal entities which are regulated by the Reserve Bank of India when it comes to banking related services, and the Securities and Exchange Board of India when it comes to investment related business. If you were to broadly categorize the activities, the ultra high net worth clients in India typically would look at the 4 broad pillars of our offering. Investments, which includes both public and private market investments. We have credit, which basically provides lending to clients against financial collateral. Then we have banking and FX, which has a large role to play when it comes to remittances that Shreya was talking about, which we do under the liberalized remittance scheme or the ODI, as well as inbound remittances, which come from overseas. That's where our banking and FX platform comes into play. And the fourth pillar is the trust and fiduciary services, where we help business families plan their long-term succession and also act as a trustee in India for onshore assets. So these are the four areas where we focus on, which provides complete solutions to our clients. Coming to your question on, what would be an ideal client? I think on a lighter note, it reminds me of a question like, what's an ideal partner or a spouse? And I'm not sure what the right answer to that one would be. But what I can definitely say is a typical client of ours would be someone who's generated significant wealth through his or her business or professional ventures, and is looking for advice with respect to his investment and planning needs, and also complement the same with our platform, which will help implement whatever advice is given. This would go a long way in aiding the individual's wealth creation journey and in over time. Given our global presence, this client would generally or normally have global ambitions. That's for someone whose wealth creation has been largely in India and is looking to diversify in terms of business interests, wealth, as well as family. That's a common theme that we see. And for someone who's already a global billionaire, will find us an ideal platform to help them with their ambitions in India. So that's in a nutshell, I would say, what a ideal or typical client would be.
Brilliant. Dr. Swahar, YCook. It's an amazing story. I've been reading a lot about it. Can you tell us what inspired it?
Thank you for having us, and it's an honor to be a part, to represent the startup community in India. I think everybody has these small life goals, and one of our life goals has been to touch 1 million lives before we die. And what better way to even come closer to this dream than to start an enterprise, I would say. And then why food? I think why food has been specifically fascinating for us, because it is like this magic potion, right? This magic potion that actually creates life. Think of every time you eat food, it actually creates these cells. It makes a small baby, the womb grow. I mean, it's such a fascinating role. It allows for life to propagate, if you were to think about it. And this is also one of the only industries that will never get outdated. So I can't think of a time, I can't envisage a time to say, oh my God, this food was so outdated. So it's not going to happen, at least for the times that I can imagine. So I think it was a good fit for us to start. When we started YCook, I think the vision for us was to create good food for all. So when we started obsessing about the word good, what does good food mean? Like, good food should be healthy, it should be nourishing, it should help you overcome all the diseases, it should help you build yourself up. And it was nothing rocket science. It was basically all the good food, where the fruits, the vegetables, the pulses, and the legumes that nature had already given to you in abundance. Now, it was for us to make the choice of healthy easy. And that has led to the creation of, I would say, the entire range of steamed snacks. You would have heard of, so we are the first creators of the world's steamed snack range. So you would have heard of fried snacks, baked snacks, puffed snacks, roasted, and now the entire steamed snacks. The interesting part of it is that if we don't need any preservatives, because the steaming process, because of its heat, eliminates all the microbes, and the packaging ensures that it doesn't come inside, and air is also not there. So you can actually carry a packet of steamed peanuts for that nourishing snack wherever you want to go. And this is one of the nourishing and satiating snacks. So which means if you have a handful of sprouts, for example, steamed sprouts, you will not unhealthily be craving for more. You can stop at one, right? You can eat and feel good and nourished. And I think that was the entire journey. But when we started obsessing a little more about the good, because we're not doing anything, right? We take what nature has given us, steam it, and then give it to the consumer as a packaging. So the quality of input is equal to quality of output. So to maintain the quality, we knew it was the seed, the soil, and the agriculture practices. And so everything that we produce or pack for the consumers is exclusively grown by our partners with farmers. And all our farmers comply to the global good agricultural practices. So there is no pesticide residue as well. So I think what inspires or continues to motivate us is this consciousness that you know that you have created a good food that I would love to give my children, and I would want them to eat more of it and to grow into a healthy future. So we have a say in creating a healthier human future. I think motivates us and inspires us every day. That's what I would say.
That's very interesting. I'm very tempted to ask you a question. Like Steve Jobs' is a story where he started at a garage. How did your story begin?
Not in a garage, but in an open shed. So we started our journey with a Technopreneur grant from the government of India. So we established ourselves in a small shed, but with a huge space outside. So we had a board that says trespassers will be retorted. So we have tried everything on earth. I think that's where we started. I think most of it started also in the kitchen. So we continue to leverage my home kitchen as an R&D ground day in and day out. So it continues.
It's very inspiring indeed. Rahul, is India able to benefit materially from the supply chain reallocation that we're seeing currently globally? And what does that mean for growth in the medium term?
Yeah, so in the current context, what we have seen is that, there already before the pandemic, there was this whole push towards deglobalization, and supply chains were kind of getting disentangled. And, there were new routes being created. And India was, benefiting, but not really benefiting, I would say, to its full potential. After the pandemic, what we have seen is that, through a combination of government incentives like the PLI schemes, that have come out for a variety of sectors. At the same time, the geopolitical necessities and the investment climate, particularly rules around foreign investment and even domestic investment, for that matter, have made it conducive for India to probably be a bigger beneficiary, right? I still don't think that we are going to be the biggest beneficiary, but certainly we are going to be among the bigger beneficiaries simply on account of the fact that we have a very large domestic market, and the market will continue to grow for the next 2 to 3 decades. And at the same time, the resiliency question, and I think the relatively weaker links to China, both from a trade and from a travel perspective, probably work in our favor to act as a ground of resilience for the supply chain relocation. So I think the optimism around the entire supply chain relocation story has increased at the margin, but then still, I think we have to recognize that a lot of our domestic laws, particularly around labor, land, tend to act as speed bumps, when it comes to larger foreign inflows or, even domestic investments to take advantage of the global, the shifting sands of global trade.
Adrish, talking about India and the supply chain and so on, can you talk us through some significant wealth creation stories that we've seen in India over the past few years? We hear of many sort of success stories like YCook, for instance. We've got stories with Flipkart and so on. So what is it that our audience can hear from you on the ground about India and these amazing stories that are coming out of that?
Yeah, in fact, to highlight the point that you made, Yuvendra, what I'd like to say is that, recent external research published highlighted that there are about 100 unicorns in India now. Majority of them would have started over the past decade. This, of course, covers a wider set of industries, which may have started on the traditional note in terms of the industries they are in. And if we even have to restrict ourselves to the startup community, we would be at around 40, 45 in terms of number of unicorns. So that's something that we've seen over the past decade. The first unicorn in India within the startup community emerged in 2011. And we've seen a significant acceleration over the last couple of years itself in terms of the number of startups having that kind of valuations, especially where financial sponsors and strategic partners have come in and put in money. Given the fact that most new age companies use technology to scale, the growth trajectory is much more quicker compared to traditional models. So that's why we are seeing this significant journey in terms of wealth creation compared to what it was historically. Further, while the opportunity within India itself is huge, given the demographic profile that these companies look at, the mindset today with entrepreneurs is not just limited to India as a market. So they're basically creating new ideas, new opportunities, starting with, of course, the India opportunity, but obviously looking at global as well. I would say the wealth creation has been more widespread. It's not just limited to the entrepreneurial journey of a few, and not just the startups and the unicorns. I would say number of dollar millionaires have doubled over the past couple of years, notwithstanding the pandemic. I mean, we're close to crossing about 1 million as compared to about 300K around in 2018. So that itself has seen a significant rise in number. Within our client base itself, we have seen many business families monetize their businesses or their private investment holdings as global financial sponsors and strategic investors look at expanding their footprint into India. I think one shift that we've seen with entrepreneurs is that the mindset of a business owner unwilling to dilute equity has seen a shift over the years. Earlier, you would typically look at an Indian business house and they would closely hold on to the equity and not dilute and not get an external partner. I think they've seen the successes of many, across the board. And I think we're seeing more and more industries and business owners, first and second generation, looking to monetize now. And I think a lot of that is also driven by the next gen. So many traditional businesses have seen next gen reshaping the business models, embracing newer technologies, markets, and also the evolving needs of customers. So they themselves are, I think urging their founders, the fathers, the grandfathers to really look at, going beyond the traditional business and see how we can grow and monetize. So these are some of the trends that we've seen. If I would like to summarize, the wealth creation process, I would say, has not only been through capital markets, which has traditionally been the case, but a surge in private businesses creating, value and monetizing them.
Some very interesting points you make, Adrish, and we'll come back using our chief economist sort of expertise, especially around the dollar millionaire and the valuation, the exchange rate, and so on. And you raise a very important point about the next gen entrepreneurs. Talking about entrepreneurs, Dr. Swahar, can you tell us about YCook journey for you and your message to the entrepreneurs who are looking to support startups in India from outside of India and the ones in India? The reason for my question is a lot of clients that we deal with normally are apprehensive about losing money, as you can imagine. So for them, what is it that they can understand from you as an entrepreneur, what your journey has been like?
Okay, thank you. So I think startup by nature is being viewed in a very, very different lens now. It's a very, very positive lens. Even when it comes to when we wanted to embark the journey of starting something, I do think our parents took it so well. So it was like, why would you give up a job and why would you want to do something like this? I think that entire mindset has undergone a change. And for us, if you were to think about it, no enterprise can grow by itself, right? You need a lot of support from the allied industries. Like, for example, I would need carton box manufacturers, I would need pouch makers, I would need printers, I would need logistics support. And earlier, this was hugely favored for large organizations, and rightly so, right? Like the bigger the volume, they have to have better advantages. But interestingly, there is a lot of change even in the support industries. So if you were to see, every industry by itself has created a small segment, which is called a startup segment, which means that they don't want to let go of that opportunity there, right? So if you were to see, it is coming together a lot of, even there are many startups in that area. So it is like a symbiotic relationship of entrepreneurs who can together grow. And that I think is amazing. So be it the credit system that can kind of be there. There is a trust on startups. So earlier when you say, I'm going to start a company, give me something, there's always skepticism. There's always skepticism about whether you run away. Where what if you cannot make it? But I think that no longer exists. People are ready to extend credit. when people are ready to extend credit, that itself means that they believe you, right? If somebody, you give me 10 rupees, that means you believe me, because somewhere I think that's the highest rating of trust in the ecosystem that can be built. And I think also one of the other, most of the bigger companies also, as a part of their growth mantra, has taken into inorganic growth. So which means that they are ready and much open to dip into the creativity that the startup ecosystem that will come. So which might be difficult when they create bigger giants. So that also favors a lot of people, a lot of serial entrepreneurs. They know that they can start, get acquired, and start again. So it's a very conducive environment, I would say. And academia is opening up big time. So earlier, a lot of knowledge was available, but it's so restricted, right? Like they were very much inside. I think we have been very lucky. So we partnered with a professor from the Shimla Potato Research Institute, and we make the best baby potatoes you can ever put in your mouth. Okay, so we have tied up with another professor who advises on something called the cook quotient, COOK, like cook quotient, wherein you can mathematically model what the temperature and pressure would have on the cooking process, right? So this reduces my iterations. So earlier I have to do trial and error, so much of raw material will go waste. So this I can now mathematically create. So my there's a reduction in the iteration and get better products. So we are able to leverage that. A lot of PhD students are now, they were very inward focused, including me. I would say when I was doing my doctorate, I think I was a lot more my passion rather than saying what is marketable. I don't think this generation is like that. They see what can be marketed, which means they leverage their intellectual power. So which is a great deal, because today you can start enterprises and you can just go into CFTR and they have technologies that you can just take along. So that is one more thing. And for the entrepreneur, I think one of the biggest fears that an entrepreneur has is, what if it fails? Right? It can happen. I mean, God forbid it doesn't happen, but it can happen. So earlier times, you had this whole thing saying, I spent so much years creating this enterprise, then I have to go back to a job and start where I left it, where my colleagues would have advanced further, right? So this was something that used to trouble people. I think leadership in industry has recognized the learnings that an entrepreneur brings in, the leadership that you learn, the personality changes that an entrepreneurship venture can give you. You become much more personally effective. So if you were to take a job and you grew in this trajectory, having an entrepreneurship would actually take you to the next level. So this is a huge change. And I think then why would you not? You one, get the chance of trying your passion and realizing your dream. And you also get the benefit of that years, if ever it will get lost. So this is a great environment. And personally for me, I think entrepreneurship journey has filled me with more optimism that I would have never gotten in any job. So I would rather have it this way. We are very optimistic people. So I think the entire environment is very, very conducive for entrepreneurship in terms of, not only in terms of specifically you and your support system, but the entire ecosystem will help you go. And this is the right moment for anybody to venture. I think the support system is perfect.
How amazing, though. Obviously, when you think of India and entrepreneurs, most often it's the old generation families that have set up businesses many decades ago. And it's lovely to see entrepreneurs like you who are finding this journey much easier in terms of setting up businesses and not being afraid of failures, because it's really inspiring and great to see this happening in India. Shreya, could you just shed some light on some considerations to be kept in mind for non-resident Indians who make some investments in India, and what are the available routes for them?
Sure. So here again, exchange controls are the driving factor. What is important to keep in mind is that if a non-resident wants to, for example, hire employees in India, it isn't possible without setting up some kind of presence in India, be it by way of a company or a branch office or a liaison office or some sort of entity set up. There are two primary routes under which this would happen. One is known as the automatic route and the other is known as the approval route. So for example, if you want to set up a company in India, in a lot of situations, it would be possible under the automatic route. Whereas if you want to set up a branch or a liaison office, you would necessarily have to go to the RBI for approval. Now, in relation to investments into shares, you would typically look at one of four routes which are available. One is the foreign direct investment route, which is possible under the automatic route without approval for a large number of sectors. There are some sectors which continue to be regulated. So, for example, in the most recent budget, what has been proposed is that the limit for foreign investment in insurance is proposed to be increased from 49% to 74%, which people have been very excited about. So depending on the sector that you're looking at, and some sensitive sectors would be, for example, defense, real estate, anything which is perceived to be an area where the Reserve Bank would want to regulate. Those are the kinds of sectors where there would typically be restrictions. But software services and ITES services, for example, is 100% on an automatic basis. So this would typically be, what you would look at under the FDI route. There are also other considerations like pricing guidelines on transactions between a non-resident and resident, and so on, which you would need to consider. The second route is known as the foreign venture capital investment route, and this would require a registration to be obtained by the foreign investor who looks to invest under this route. It is typically allowed for companies which are engaged in specified sectors and whose securities are not listed at the time of issuance of securities to the FVCI. You can also make investments into startups under this route, irrespective of the sector in which the startup is engaged in. And it is also possible to invest in certain categories of alternative investment funds. The third route is known as the foreign portfolio investment route. And this route has been, again, a route that has gotten a lot of attention because it can be quite tax beneficial for investors. And it clubbed the previous foreign institutional investor and qualified foreign investor route. This happened a couple of years ago. And this route is available for investment into listed or to be listed securities. There are, again, some restrictions that apply. So, for example, an FPI can only invest up to 10% in the underlying company. There is a ceiling that is prescribed. But the one important change, I think, from a non-resident investor perspective, is that a couple of years ago, NRIs were allowed to invest via the FPI route. And then what started happening is that a lot of NRI money started coming in through this route. And then subsequently, the Reserve Bank asked for it to be brought down below the 50% limit by December 31st, 2020, because they realized that there was so much interest that NRIs and OCIs were actually the substantial investors via the FPI route. So there's actually been a lot of lobbying on that point for the FPI route benefits also to be made available to NRIs, considering they have been the more prominent supporters of the Indian story over the last couple of decades. Still not parity between NRI and FPI routes, so something to keep in mind if you're an NRI who's looking to invest. The fourth potential route is NRIs can also invest in their own capacity as individuals, for instance. And if they make these investments using, for example, rupee funds under what is called a Schedule 4 investment, then it would be treated as comparable to a domestic investment. So that option is also open, particularly if you're looking at some kind of restricted sector, for example, where foreign investment is not possible.
Thank you very much. It's definitely very interesting. And I'm sure our audience who are non-resident Indians looking to get some exposure into India, this will certainly be valuable to them. Rahul, if I may come back to an interesting point that Adrish had made about millionaires and the rupee, right? So obviously, in the past, sort of rupee depreciation was a major factor in eroding returns for foreign investors. What do you see in terms of the next decade? What are the challenges, and is this going to continue? Of course, without, if we all knew where it was going, we'd all be in a very different situation. So it'll be interesting to hear your thoughts.
Sure. Well, I think a decade is too long a time, but if you just sort of draw, say, a 75-year chart on dollar rupee, it really trends one way, right? I mean, we have gone from 5 rupees to a dollar to about 75 rupees to a dollar at its peak. But then I think there are a couple of things, that investors and especially non-resident investors should keep in mind. Is that first of all, India's, over the last 2 decades, the foreign reserves buildup has been quite strong. But I think one of the biggest defining features, particularly of the last 5, 6 years, has been the control on inflation that has come about, right? So even though right now inflation is running a little bit hot, a lot of it is just a reaction to the taxes which have gone up in the system, right? So it's a policy choice that the government has adopted by increasing fuel taxes, and that is what is basically getting reflected. At the same time, our foreign exchange position has probably never been as good as it is right now. India has about $580 billion of foreign reserves in spot. We have another $55 billion of forward reserves, which will be accumulated over the next 1 year at least, if not more. And we think that there is a possibility that India could be looking at about $650 billion in spot reserves by the end of next year, and we might be looking at closer to $1 trillion in the next 5 years, right? So, from an external stability standpoint, I don't think India has had it this good. Having said that, I do feel that there is an element of mercantilist policy which has sort of seeped into the way we are approaching this whole supply chain resiliency and the relocation, right? So, over the last couple of years, there has been some speculation that the government of India and the RBI are trying to basically look at CNY INR cross, as an important benchmark of competitiveness. They're also basically trying not to have very large appreciation, because eventually bouts of appreciation are very short and they tend to result in very large bouts of depreciation. So the rupee is not particularly cheap. It's not particularly expensive as well. And the enormous war chest that the RBI enjoys right now should allow us to basically stem any major depreciation pressures, especially in an environment where US exceptionalism seems to be making a return, at least for the next few quarters.
That's very interesting. Staying on the subject, Adrish, how has the banking and regulatory system evolved to attract more capital flows into India in the recent past?
Yeah, sure. So Shreya did touch upon, some of the routes where non-residents, not just NRIs or persons of Indian origin, but also foreigners can invest into India. So without, some of it, if I would look at from a banking perspective, the trends that we've seen, of course, NRIs or persons of Indian origin continue to have a regulatory regime which facilitates them to directly participate in Indian markets through the portfolio investment scheme, which is commonly known as PIS, and repatriate the proceeds back. This has been around, and that the government continues to facilitate that. The major change that we've seen, and something that Shreya highlighted over the past decade, was in terms of attracting capital flows through the foreign portfolio investment route, the FPI route, which allows foreign entities, family offices to register themselves with the regulator here and invest in the Indian markets. Of course, NRIs would love to also probably utilize that route, and there's a lot of lobbying happening on that front because there's not parity with NRIs coming in through that route at this point in time. And that's something that obviously some of our clients have also, aired that view. I would say from a regulatory regime, the regime has been strengthened over the years, and it's strengthened the marketplace, which provides more confidence to participants and consequently attracts more flows. That's the, overall direction of change from a regulatory perspective that we've seen, whether it's, the various regulatory licenses, the brokers, all the market participants. I think the governance standards have been much more stronger compared to what they were a decade back. In addition to FPIs, in our business, we also see significant flows under the foreign direct investment route, which again was touched upon earlier, which has been liberalized over the years, allowing overseas investors to participate in most industries, barring a few sensitive ones, under the automatic route. And the reporting of these flows under FDI, we have been doing a few FDI transactions, and that reporting also has been streamlined and automated over the years, and that has resulted in quicker transaction exchange at the time of deal closure. So some of these things which do not sound as big announcement, but obviously give confidence to anybody who's bringing in funds, large investors coming into India. And that's also a resulting in more flows that you've seen over the years. I think all of the above, coupled with robust market, regulatory infrastructure, would continue to attract flows into India. I think that's been the focus of the regulator.
Excellent. Thank you for that, Adrish. I'd like to ask a question to Shreya. Could you share us an interesting case study in which you've helped ultra high net worth families with multiple touch points?
Sure. So I'm going to pick up from something that Gayathri mentioned a while ago, which is that families are increasingly becoming open to the idea of startups. We see this a lot with the families that we work with as well, and it could manifest in a couple of ways. So one, for instance, is that the next generation or the younger generation frequently wants to spend some time setting up a startup and running their own business, particularly if they're not the immediate next in line who's going to step in to run the family business. And very often what also happens is that the families plan for this contingency when they're putting together their war chest, for example, for education and healthcare and so on. Very frequently, they will also put aside a fund for startup related funding requirements for entities which are set up by family members. So in one particular case, for instance, which sort of brings together a lot of the pieces that we've been discussing, what happened was that there was this son of a business family. They were all living in the US. He was pretty young. He had just finished his graduation. He wanted to come to India and set up a business which fell under the automatic sector. So it was a gaming business. And initially, the discussions related to what kind of an entity to set up, whether to set up an entity in the early stages. So, for example, if you're still exploring the market, you may not want to set up a company or a branch or any of those things. So he did look at hiring people through a consultancy process, or just figuring out what kind of scope the business offered for him. Eventually, he did end up setting up. And then the question for him was where he had to aggregate value. The issue that happens very often when there are businesses being set up in India, and particularly if they're tech heavy, is that tech is likely to receive better valuations in the US. And so what he ended up doing was that he set up a US entity in which to aggregate value and had the Indian entity as the development arm. And therefore, a lot of his customer contracts, investments, etc., came in at the US level, including from his family. So this is an example of how the personal intersects with what you're doing on the business side pretty frequently. And in all of these situations, exchange controls continue to be a strong driving factor, in addition to, for example, tax laws. So one of the things he considered was whether he should apply for a DIP registration as a startup, because that would have entitled him to certain tax benefits. He finally did not go ahead with that option because he thought it was too cumbersome for the benefit that he was ultimately getting. But it was one of the factors that he considered in setting up this business. So important to look at FEMA, important to look at Indian tax considerations, both at the time of setup, operations, as well as upon a subsequent exit. And this would all also feed into the question of where your value would be aggregated if you're setting up this kind of business.
That's brilliant, Shreya. Thank you very much. It's definitely great insight, especially for people who are looking to invest in India in startups and other businesses. Dr. Swahar, being a female entrepreneur, did you face any challenges in setting up your dream project in India? Because this is of particular interest to a lot of entrepreneurs and businesses. What is your message to female entrepreneurs or the ones aspiring to be?
So I think specifically for me, I don't think being a female entrepreneur brought me any disadvantages just by the virtue of the gender. I think it was more about what I could bring to the table and what I was not so good at. For example, we have excellent negotiators in my team. So that's not the place. If it's not my strength, I don't want to go and be standing there and negotiating, because I am good at something else. So I think it was about playing to the advantages and the strengths that you brought to the table. But that said, I also want to say, like, for example, there are cultural issues. Like, for example, if there is a farmer who's around, say, 60 or 70, he would never come to me and talk to me or discuss with me on rates. Like, he would not want to negotiate with me, right? And most of his conversation will be, well, how are you? How are the kids? And all more pleasantry. What the thing is, I don't think those things I do take as personal things, but I do take it as a cultural issue in which we all strive and thrive. But that said, it also, when I'm talking to younger entrepreneurs, younger farmers, for example, I let some of my grays let it be. And my specs do add to the advantage. I say, hey, you know what, I'm much older to you. And then it kind of breaks the ice. So utilize your age to the advantage where probably the gender might play a disadvantage. There are places where it is a huge advantage as well. So we started a kernel podding unit. Like, for example, we have created an entire flexi working system for the villagers around us. We run something like a BP of kernel podding, because we are the only ones who do hand-podded kernels, so where the kernels are removed by hand, and which has a huge advantage in terms of nutrition, and of course gives us an edge in all our export orders as well. So in this setup, it is nice to go and find these women and who want to have a flexi time opportunity. It's like a kitty party where you come and take back money. And this also gives us a little edge when you're talking to them, women to women. So they told us, saying, why don't you give us the fresh produce, or whatever the agriculture waste. And what we've done is we are almost around 1,700 livestock are getting supplementary feed because of the factory. So this entire village has actually won an award for milk production because just because of the presence of YCook, because the fodder is free, they've just increased. So these are some advantages also you bring in because you're women. I think that is something we have to leverage. And in the current scenario, I think there's a huge push to have a female member in the founding team. A specific advantages you have. Whether we like it or not, Women's Day is celebrated with much bigger grandeur than the International Men's Day. And leverage it, right? Like, I think we got the best PR, free PR, that otherwise the only male founding members wouldn't have got it. So I bring in huge advantages to the table. And the investment scenario, I think investors are looking, the entire ecosystem is looking for upgrading of women and creating gender equality, which ideally means that we bring in more advantages to an enterprise than disadvantages. Or you are at a more advantageous position just by the virtue of being women. So leverage it. Why not? One of the things that I would say for all female entrepreneurs who really, or wantrepreneurs who want to be entrepreneurs soon, is that surround yourself with support system so that your family life functions as seamlessly as your entrepreneurial life. See, however you like to compartmentalize this, life is not compartmentalized. So if there is a sick child at home, it will affect that day's work. And this cannot be isolated. However you want to say, oh my God, I bring in personal efficiencies, this is not possible. So surround yourself with support system, and there is nothing, it is very empowering to be supported. So don't think, is that a personal failure that you're not able to cook like 100 meals for your children or be available to them all the time. So sometimes this support system does help. And I think one more role I would really urge all women entrepreneurs is that you do it for yourself. Of course, you do it for yourself and your dreams, but we owe it to the next generation, because monkey see, monkey do. Monkey will never do what you say. Monkey will only see and do. So what is the next generation, right? They look at women entrepreneurs. You have more girls wanting to be entrepreneurs, wanting to take into workforces. So you owe it to the next generation. So the gender equality that we are all lobbying for will get hugely advanced when more of you come inside. So if not for your own good, I think for the betterment of the world, I think jump today. There's nothing stopping you, and you're at a great advantage. You'll have huge PR waiting for women. So leverage it. If there is, this is one scenario where you have an advantage of being a female, then use it. and I think you should use it well. And I think that's where it is. Personally, I think we have a huge advantage, and I think we should just take it. So that's what will be my take.
That's amazing. Well, it's so nice to hear, because we at Barclays take diversity very seriously, and we have various campaigns, he for she, and various other initiatives that we make, because for us, this is one of the most important topics. And I'm very happy to hear your messages in this context. Rahul, I can get carried away asking questions, and I think I should give some time to the audience as well. Very briefly, could you tell us how India is positioned for investments, and perhaps some significant foreign investments that have been made in the past?
Yeah, so as I was saying earlier, that the investment climate from a top-down perspective has been improving, and I think the entire push towards privatization, coupled with certain, whether it is the startup industry, that's been very exciting from an investment standpoint. But a lot of it tends to be high value, but low impact in terms of employment. I think what's interesting is that the government is now through the PLI schemes particularly is trying to sort of push for a lot of the low value added but high employment generating manufacturing employment. At the same time, there's quite a bit of interest in traditional areas like in the telecom sector. We have seen tremendous amount of foreign investment coming in. We saw what happened with Reliance Jio last year, and at the same time, I think when 5G starts to get rolled out, we should see significant interest ramping up in India's telecom sector again. At the same time, we also see in in a lot of infra areas, whether it's through funding coming in through the sovereign wealth funds, the pension funds, there's quite a bit of money coming through. But at the same time, I think it's also a question about viable projects. So one of the reasons why we are saying that the investment cycle in India is still very late cycle and might take another 12 to 18 months to sort of pick up steam is because we have still at the late stages of the deleveraging process, right? So a lot of private companies are just about deleveraging their balance sheet, and while there are interesting projects around, it might still take some time before you really see that construction period or the real impactful period of the life cycle of these investment projects come through. So good optimism around investment, but I would say a lot of it seems to be very strategically placed. A broad-based investment cycle still feels 12 to 24 months away right now.
Brilliant. And one or two deals you've seen, which is a landscape deal in the recent past?
So I would say in terms of, the Reliance Jio definitely was quite significant because, it really put the emphasis back on, the amount of investment, whether, Reliance had done, but at the same time, the kind of, names we are hearing for some of the government companies, say something like BPCL, which is should get privatized in the next 3 to 6 months. I think LIC will invoke a lot of interest from foreign investors as well, through the equity market channel. And then, you keep on hearing about these massive inflows coming through the startup sector, right? I mean, they tend to be small, but it all adds up. So, to put some numbers in perspective, India will have more than, I think, about $50 billion of net FDI inflow. This is the highest we have seen ever in absolute terms, and even on relative basis, it's quite high as a percentage of GDP. This number, I think, should basically hold up for the next decade or so. So there's plenty of room and a lot of capacity for these investments to get absorbed.
Fantastic. Okay, so the last question to Adrish before I move to the audience. What trends are you seeing from global investors wanting to see in India in terms of their ability to invest in India?
Sure. Before maybe I get into trends from global families and family offices, would like to just reiterate the point that Rahul just made about the annual inflows that come in has doubled over the past 4 years. Rahul did mention about a figure of, I think, 40 billion plus. So that's the kind of growth that we've seen in terms of the flows that are coming in. Fundamentally, this is driven by the opportunity that India provides among high growth economies. And it's not just availing of funding, which is driving new ideas and young entrepreneurship, I think, but also factors like, digital infrastructure has been key, be it high speed internet penetration, payments infrastructure, logistics, all of this has led to a rise in high growth startup ecosystem, right? So earlier, the focus for global investors, specifically when you're talking of what type of trends, used to be, especially NRIs, used to be skewed towards public markets, where largely they would come and participate in the public markets in India, or let's say simple plain vanilla deposits because they used to be fairly attractive rates. Given the significant wealth creation that we've seen in the private markets over the last few years, we have seen that shift in interest towards private markets as well as compared to public markets. Many large global families are keen to participate directly in private opportunities as against using pooled vehicles at times. They have the wherewithal to evaluate and come direct. They do that globally, so they're happy to do that with Indian companies as well. So in summary, I would say the interest has expanded into private markets in a big way, in addition to the the public markets, which were always there.
That's fantastic. Look, thank you very much all for your time. We're going to now move to question and answers from the audience.